What's up, everyone? Welcome to Let's Talk Markets with Dave Lauer. We are bringing you another Markets Monthly this week with Dennis Dick joining us again. Eric Smolinski was unable to join us today, but we've brought a new Irvin friend, George Kailas, with us. He is the CEO of Prospero.ai, and he actually just set up a community on Irvin for Prospero. So thanks for joining us. We're really happy to have you guys with us today. It's good to see you guys. We haven't seen you in a little bit, and we've got a lot to talk about. Markets have been all over the place since we last met, Dennis. So good to see everybody.
Thanks for having us.
Yeah, thanks for joining.
Thanks for having me.
George, you've got a great view behind you. So there's kind of a little bit of a change in visuals this week with Dave's different background, and I'm just hanging out in audio. So thanks for bringing the A game on the background.
There
Nice.
you go. You guys don't have to worry. I got you.
Yeah. Last week, someone cut my internet, and it hasn't come back up correctly. So I'm on my laptop. I hope it's okay. We have various theories as to who might have cut it.
Perfect.
There was an empty jar of mayonnaise by the connector, by the hub there. So I'm not going to say that it was Gin Criffin, but it could have been.
Your buddy. That's your buddy. We're all like Kenny.
So it's been an eventful year, 2024. Don't you think? It's been fascinating. It's been a roller coaster.
Yeah.
And we're sort of at this interesting point. So I was just looking before we came on at this chart of SPY. Starts the year, at the like
470.
470s or so, right? And today trading at 518, which is close to the high for the year, which is around 525 or so. So it went up pretty straight, dropped pretty precipitously, has come back pretty hard, and I think everyone's wondering where from here.
I mean, it's been the first 3 months was AI driven. That was the market. NVIDIA leading the charge. We know the SMCI story. Obviously, AMD had multiple tech stocks just leading the charge. And then, really what we had was this fall off really in the TLT and this rise in longer term rates. And then that spooked the market, some inflation, a little bit of hot data, not even super hot, just enough to spook the market. And we saw the IWM kind of fall off a cliff. This would have been in April. So that brought the IWM down to flat on the year. Tech still held up even in the sell-off. We can say, oh, well, NVIDIA sold off 100 points or 150 points, but, it was up from 500 to 900 to 770, held up fairly well. Tech held up fairly well. But what we've seen happen in the last, I'd say, week is a little bit more broadening out. And that's a good thing because this market has been just tech and everything else left in the dust. Broadening out more in the last week. And again, maybe rates helping that. TLT starting to rally, longer term rates starting to go lower. We know the broad market wants lower rates. We know AI trade probably doesn't need lower rates, but there's a lot of stocks that absolutely do. So a little bit of broadening out here in the last week, but still, there's a battle between the bulls and the bears here. I mean, the bears are saying inflation's ticking higher, no rate cuts this year, can't live on the AI trade forever. Bulls are saying, well, we're broadening out a little bit. Maybe some of this data, starts to come in and maybe we do get some rate cuts. So, I mean, it's a little bit, the second half is going to be dictated, one, from inflation data, and two, what is the Fed thinking?
Mm-hmm. Mm-hmm. What do
Yeah,
you think, George?
one thing that I'm tracking and have been a lot closer is I tend to look at more sector-based things in the past, but what I've started to track are the 6 small cap growth, large cap growth, mid cap, and then, value as well. And actually tracking that has made more sense of it, but also just makes it completely crazy because what I've seen is one day large cap growth is down, one day it's up. And I've actually seen, since I've been tracking it very close to the last 2 months, at least 4 days where it started one way and then turned hard in the other. So I think why that's been helpful is that gets me a better proxy of AI, because obviously in that large cap growth, you're going to get things, you're going to get big comms companies like Google and Meta, and that doesn't, track in tech as well. So you get a better proxy for that. And basically what I'm actually seeing is I've started to see a lot more clarity basically in the last month. Large cap growth has been the best performing of those six, and then in the last week it's been the best performing of those six. Today it's been pretty mixed, so I have started to see more consistency there. And I think the funny thing is, I think someone started out by saying, nobody knows what's going on, and I would say that goes right down to the institutions, that they don't know what's really going on. And I think it's really just a battle over the thesis of, is AI overvalued or not? And that was, I've been on this for, probably a month or
Mm-hmm.
two, and I'm just getting more and more data on it. This morning, basically, Drunken Miller said that AI was now overvalued, and he was pulling out of Nvidia, and that kind of changed what was a pretty good 2-day run on large cap growth. So I think for me, that's what I'm really focused on. I'm looking, we publish an option sentiment metric for QQQ and SPY that I look to really help me and can be a good leading signal in a lot of situations. So I think leaning on that and figuring out what the AI story is not only what I'm looking at, but I think probably what most institutions are looking at. And I think when they get more clarity on that, I think to your point, that kind of is agnostic to rates, if they can really figure out what the story is. Because we've actually seen, the way earnings have reported, SMCI was a little underwhelming. Nvidia is going to be a big report, but there have been ones like Qualcomm there was a pretty good reaction to,
Mm-hmm.
and then other chip stocks rallying around that. So I do think that we are seeing like both a lot of people kind of wanting to bet on it going up, as well as people sensitive and looking around and over their shoulders and saying like, hey, maybe it is overvalued, including a lot of the hedge fund people that I talk to. So I think that that's going to be the story of the year, and that's just going to require, as Powell likes to say, the data to come in.
Yeah, I think I was sort of on the train of this AI thing is crazy and overvalued, despite being very much a technologist and very impressed at the level of the technology and its leaps forward. But from a valuation and a financial perspective, still seemed dramatically overdone to me until talking actually with both of you, like Dennis on the program. I think you've pointed out very reasonably that certainly like forward PEs are not completely insane, let's call it.
Yeah.
They're frothy but not completely insane. And George, your newsletters have been really instructive for me from a sentiment perspective, as well as a value, as well as sort of defending the thesis, right? Because to think that AI is priced at a level here that is at least worthy of considering additional investment, you have to think that this is a tremendous transition that we are making as an economy and from a technological perspective, that this is a paradigm shift, and that the money that's going to be flowing into these companies over the coming years and their ability to manufacture, to capture those flows, that all of that is in place, and that the growth story will maintain. And coming in as a skeptic, because I think I've seen too many bubbles at this point, and it leaves me maybe more conservative than I used to be.
Yeah.
I don't know though. I look at this and I look at what's going on, and I think, you know what? I mean, maybe the story is reasonable, and maybe that's what everyone says as the bubble is about to burst. And I do see the bull bear fight. I think you put it really well, Dennis, because even on our macro monthly episodes, where we've been trying to tease out what the heck is the Fed going to do? Is inflation something that is sticky and something to worry about, or is it continuing to trend in the right direction? I think we've always been skeptical that a cut was coming, by March or June, but certainly towards the end of the year. And I still think, that's where we see things headed. And we still see a couple cuts coming this year. So does, if you look at Fed Watch futures, so does the so does the market. So, assuming that inflation is terrible for people and a little stickier than we had hoped, but the components of it that are keeping it elevated are like auto insurance and owner's equivalent rent. And that's not really what people are experiencing on a day-to-day basis. And then, looking at, I think, what the market's reaction to that uncertainty has been. I think that's the chop that we've seen lately. And I'm just, it's interesting, George, to hear your views on how the different sectors are reacting, and the sector rotations that we're starting to see. And so large cap growth is where you're seeing the best returns right now. Do you how has that shifted? Has that been like a shift that you think will be persistent throughout the year, or do you have thoughts on how that sector rotation is going to continue over the course of the year?
So I think like large cap growth has how I like I tend to always like large cap growth. That's my bread and butter. I time those as well as diversifying. Like a lot of actually what I've made money on this year when I did my quarterly review, I was surprised how much energy and utilities was in there, just because I've done more to diversify when my large cap growth names are not giving me clear signals, because that's just a big thing that I turn to. And actually, when I reviewed, I saw that I was doing more consumer cyclical longs, but that was things like Tesla last year, a few other names. So it was just like a slightly different like look at the large cap growth, which again, that's another company that is, not necessarily in the same tech sector at tech that is kind of carrying, that particular thing. So I think part of that was the realization of just like, that's what I tend to like. That's what I see the clearest signals in the options markets at. But like, as we're talking about here, I've lost some clarity in that. So I'm looking for more diversification, but I do think that, we'll have it back. And I think that, one of the interesting things about the bubble question that I wanted to address as you were talking about is like, I've never seen quarters. Like Nvidia posted the best quarter I've ever seen 2 quarters ago, and then they posted an even better quarter last quarter. And it was just like, I wanted to put this in perspective. They're 236% growth. And I looked at Amazon the last 15 years, like my favorite growth company other than that. And the most they ever posted was a 59% increase. So it's just like, how can you be talking about a bubble when you're talking about staggering growth like that and the profitability to go along with it?
Yeah.
Right.
The one other thing there is that I'm just like, so I think like to answer your question more directly, like I think we're going to go on another run if Nvidia posts good numbers. And would I bet against them posting good numbers at this point? I don't think that's not a bet. That's not a bet I really want to make. So what I tend to do for like Nvidia earnings is I'll buy like SMCI and Broadcom, because I don't want to bet on their earnings, but I'll get the drift off of those names. But like, yeah, I've never seen anything like it. And that's what, like, I think that's what you have to look at, where you're just like, okay, is it overvalued? Maybe, but it's just like, when the numbers are like that, and I do want to actually pose a question to you guys after this, because in talking about AI, one of the important signals that I'm trying to diffuse is like the Elon Musk of it all, and everything that he's doing right now with firing the supercharger department and basically saying like his reasoning for that is AI. And I'm just like, well, what's going to charge the cars, right? Like, okay, AI is driving, like who's charging the cars? Like that's what I want to know. But like, that is one thing that, if we're talking about like the core of this, like, is it crazy to keep betting on AI? Like, that's one of the signals that I really want to understand better. And I don't know if you guys have thoughts, because like Elon Musk is he's always been a visionary, but he's now like teetering on the edge of sanity. I think even if you're a fan, you you could probably at least acknowledge that.
That's a euphemistic way of putting it, I think.
Yes, but it's just like, what, like, does he know something here? Like, are we actually closer to AI than even an AI bull? Like, I think, I don't know.
It's hard to bet against AI. I mean, everything you just said is stuff that I've been talking about on pre-market prep for the last 4 months as well. I mean, you look at NVIDIA here at $916, and you see it trading at 35 times earnings. When we were looking at it at $600, it was trading at 35 times earnings. The multiple, amazingly, hasn't expanded because the earnings have grown so much. So people argue, well, it's a bubble, it shouldn't be trading. They'll look, and if you're on Twitter, they'll look at, obviously P from last year, trailing, whatever they can do to make it, sound like it's just ridiculously priced. It's not ridiculously priced. The only argument I would say the bears have is the pull forward been so much that their actual growth, this is showing like just it's all pull forward. It's not going to continue to sustain at the rate it is. And I'm sure there's some pull forward in there. But even
There's
say,
also, I think there's like some level of circularity, right? Where they sell, they seed their own customers and then sell to them. I think there's something going on there,
sure,
but I
and
haven't been
and
clear as to
and
how
that's
much of their
the
revenue
good
that
bear
is.
argument. But when you're just looking at a valuation, if you're just taking the numbers straight up, it's not insanely valued. I've been on the show on Pre-Market Prep saying I believe NVIDIA is going to be the most valuable company in the world. I've been saying this for a few months now. I think it's going to eventually pass Microsoft. I think it's going to eventually pass Apple. It got up to number 3, with Google's, and then Google, and then it had this little sell-off. So I don't know if it's 3 or 4 right now, but I think there's a path here for it to be the most valuable company in the world. If AI, and it goes back to what you originally said, Dave, if AI is really, we're just in the first inning here, and this is going to be something that is going to be in everything eventually. Nvidia's in the pole position. It's right there in everything. So I mean, you just see a company get mentioned that, oh, we did a deal with Nvidia, and some of these smaller companies go up 200%. I mean, well, what about Nvidia in itself? That's just a mention of we may do a deal with Nvidia. It has that much power right now. So I believe we're in the first inning. I don't believe we're in the 7th or the 8th or the 9th inning. So that's why I'm positioning my longer term portfolio to continue to benefit. I don't like paying 35 times earnings. I don't like thinking about the pull forward. I don't like thinking, but if you just think about the growth that could still happen if this goes into everything, I mean, this company could eventually be the most valuable company in the world.
I think, George, you agree with that, right? I mean, judging from what you've been publishing, and so we don't have a contrarian.
I know we screwed up. We should have somebody.
Here.
Dave's got. You got to be the contrarian. Me and George are on the
No,
same team, maybe here.
I'll give you some contrarian. I'll give you some contrarian points.
Sure.
Okay.
Because I have some concerns with NVIDIA that I don't have with some other companies, and I'll situate that. The first is like the obvious one. I think that like on their 236% quarter, they were down when they made that announcement because they were concerned about China. They expressed concerns. So I do think that that is a big potential risk factor. Obviously, I always call it the AI Cold War that's being developed here. And a new shot was fired with TikTok. So I don't I don't necessarily feel that secure about the Chinese demand. And obviously there's some things with like only certain chips could be sold or whatever. But here's the other one that's why, like, honestly, I would rather own over the next 10 years Google, Amazon, Microsoft, or Meta over NVIDIA. And that's just because they've started to make their own chips.
Yeah.
And like I would say, I don't think NVIDIA is going to die. But like I do think, and I talk about this all the time, they have that stranglehold under 80% market share. I think if it ever goes below, those valuations that we're talking about are gonna are gonna get cheaper fast and for good reason.
And how can it not go below, right?
Yeah.
I mean, and especially talking about China, I think that's a really important point, because every time that there's been any attempt by the West to wall off China or block them from something, the level of investment and effort they've put in to recreating that thing and usually coming out with something that is as good or better and much cheaper, they have a pretty good record of doing that. And it's hard, it's almost unfathomable to think that they won't be doing the same thing with these advanced semiconductors.
Yeah. I think the counterpoint is they have been trying, and a lot of people have been trying to build chips as good as NVIDIA, and they haven't been able to. But like I do think it's kind of just like when I look at those other businesses, it's just that like Nvidia's got like their first home, their second home, their like all of their mortgages are on these chips, right? And meanwhile, you got like the other company. I mean, Amazon is always my favorite company just because they roll out products better than any other company I've ever seen.
Yeah.
And then you obviously have the cloud giants, and one of the reasons I like the cloud giants is because I think almost all services in the future are going to be sold through those cloud companies and AI. And I just think those businesses are just going to become that much more massive than they already are. And it's just like there's just not the same kind of risk factors in those businesses that you talk about with NVIDIA. Now, like, what is the chance that that happens? I don't know. That might be a fun question. I wouldn't call it any greater than like 30% that there's like a serious threat to NVIDIA, but that 30% is catastrophic if it happens. And I don't see any catastrophe in those other businesses.
Well, I mean, we saw it last night with Apple news coming out that they're looking at producing their own chips for database. And on that headline, Apple, I was trading last night, Apple ripped higher 2 points in basically like 2 seconds, because the algos were all over it. And NVIDIA getting hit. And NVIDIA was hit very hard today, was down at 1.25 points on the day. Actually, 30 points. This shows an 823 low, but that's not right. 890. So it was down as much as 30 points on this. Again, the buy the dippers reemerge, and again, they come back. So you can see what you're talking about, George, just a little taste of potential competition, and boom, 30 points comes off the market cap. Now, markets now just got this, we buy all dips on anything to do with AI, and that's what they've done here again. But I mean, it's a good point you're making. Competition's definitely coming for it. Lisa Su, even from AMD, is very smart. What she has done with AMD is nothing more than amazing. I mean, it's not absurd to think AMD coming in here and taking some market share from NVIDIA as well. So, that would be arguments against. And I'm full disclosure, I'm long AMD, I'm long NVIDIA, I'm long Amazon, and this is my long-term portfolio. I'm long pretty much all the companies you just mentioned. But so, but again,
And AMD has really significantly underperformed NVIDIA.
It has. And because, one, the earnings weren't great. They weren't seeing anything, to really what, NVIDIA has been showing. So the question is, can Lisa Su figure it out? I would never bet against Lisa Su. But then you look at the multiple you're paying 55 times earnings over at AMD, and you're paying 35 times NVIDIA. And people argue, why the hell would I buy AMD? Now, the question is if they come in, they start taking market share. And because the market cap is so much lower, AMD has that bigger potential. It's hard to grow a $2 trillion company, but when you start talking a $200 billion company, a hell of a lot easier to grow. So there's that potential there too. But yeah, AMD is massively, it's had a bad 2 months. It's 220, it's down to 155. And the quarter didn't help them. Again, the dip got bought, but there's competition coming from all over the place for NVIDIA. The question is, how soon?
Yeah, I mean, I think like one thing that's very interesting, and I like who knows if who's wrong about this, but I got shouted out of like a tech space on Twitter when I talked about AMD and CP. They've invested a lot in like CPU optimization to take away from like some of these GPU processing farms. And I got shouted out of that for that. They were just like, you're like some people I got like, I mean, I guess I wasn't in their in crowd, and they were all just like, no, and they were all like NVIDIA bulls.
Yeah.
But that tip actually came from my cousin who was who's at JPM, and he's on the buy side, but he was formerly an industrials analyst, and so it was kind of funny. I didn't want to get into like a whole like that never goes very far. Like my cousin works on Wall Street, and like he said this. But yeah, I think that like that is something that's just like another example, and like that's not even like legitimate in the Twitter space. But there's just like, to your point, like I also like think Lisa Su is very smart. And like maybe those bets are good ones. I mean, the one thing that I do think is kind of interesting in all of this is like the end use servers and the help, because obviously SMCI and their specialized thing, that's like Prospero was actually pretty early to SMCI, so that's one that I've
Nice.
watched for like a very long time because like I looked at it popping in like net option sentiment, and I was like, what is this company? And then I looked at it and I was like, oh, that's really cool. Like that is like that makes sense why people are betting on it.
Yeah.
But then you even have like Dell coming
Yeah.
back. I don't know if you
Yeah.
guys I
Really?
like
No, I haven't seen
yeah,
that.
it came out. Yeah, Dell is back.
Oh yeah.
Like Dell's
Back. Big time.
like it's it's in my like net option sentiment screener, and I was just like I looked at it, I was like Dell, I was like, and then I looked, but they're doing those like performance servers too. Like because I was like it couldn't possibly be PCs, and it wasn't. But they do some of the server kind of hosting stuff that Nvidia is like growing really fast at. But like that all it all like goes to say that it's just like there not only are we talking about like these individual threats, but it's all just like all of these different companies that are developing technologies that I think it's what you said, Dave, like how can they keep it, like even if they just figure out a way to do it less good and cheaper or like whatever. It's like it is amazing, but I do always kind of end this by being like, this has been the case with Nvidia, and they just like keep their stranglehold. Like every
Yeah.
new chip they come up with is just like orders of magnitude faster, and no one is even coming close to keeping up. So that is the other side. In case anyone thinks that we're saying sell your Nvidia shares,
No.
they just keep on proving these doubters wrong. But at the same time, like I always think in risks, and there's just like too many risk factors for me to feel comfortable, like even owning options on Nvidia, whereas I would own options on SMCI in a second if I wasn't no longer trading.
Yeah, I mean, like Dennis, I've got Nvidia in my long-term portfolio, and I don't tend to own many individual stocks,
Yeah.
um, but that's one of them. But that's from a while ago, and certainly not nearly enough, unfortunately. But
We're all that.
as
Couldn't it be awesome to just have 100% of your position and all the good ones and
so good,
short,
right?
short
Why
all
doesn't
the
that
other ones?
happen?
Hindsight
I
capital,
started
man.
adding Nvidia in the 300s. Like what? Why
Yeah.
didn't I just go all in? What was I thinking? But
I bought my first position at 408, and I was like, why didn't I go all in? I should have just
right,
put
right.
the whole portfolio in that. It would have been awesome.
But and I'm someone like I think like you, George. I tend to look at what are the spillover effects, or what does the supply chain look like? And TSM is something where I've been pretty disappointed in what it's done. But geopolitical risks are
Yeah.
probably a big part of that. And
Yeah.
so ASML has been another way that I've been playing this, and that's another one where, to me, that at least at the moment, that technology is so incredibly specialized that I don't know that there will be much competition coming for them, and it doesn't necessarily matter sort of who comes out on top when you're selling the jeans and the pickaxes, for example. And I think ASML was something that you've been talking about in your newsletter too, George. Is that right?
Yeah. Yeah. I've owned them a couple times. I've owned Lamb Research too. And those are kind of like, yeah, I think I alluded to this a little bit. I go to those when like I still want to be long this AI play, but I'm feeling a little bit risk off.
Yeah.
And I think that that's just like a way better, like things around earnings. Like I've owned them like around like SMCI earnings. Like I've even owned like Lamb Research and ASML around that because I just want like, yeah, similar like the spillover, and I don't want the risk. But yeah, I mean, there's tons. I think basically what we're saying is like in different ways, like any of these names are going to be like any of these
Yeah.
names are going to be good.
Yeah.
You buy any
All
of
right.
them and you're going to be happy 5-10 years from now, I think.
All
Maybe
right.
we
So
should take it and then so it's interesting, our conversation starts, with broad market and then it gravitates right to this. And this is the investor's mindset, really. Like this is what the
mhm.
small caps are fighting. I mean, what's sexy about
Yeah.
these 2,000 companies where 1,300 of them, are struggling to make money? No AI stories in the IWM, very few, maybe some users of AI, but it's just not
Mhm.
there. And it's like, you're going to launch a new ETF. You're going to launch something, based on a bunch of small caps that just aren't sexy at all. You're going to launch it on the ASMLs that you're just talking about, this sexiness of AI. So it fights that as well. Like this is why you see this outperformance that seems to happen no matter what in large cap growth companies, because even during the March and April downturn, where they're like, well, you know what? We're going to go for a downturn. Nvidia is going to crash. What really went down the hardest were the stocks that didn't participate at all in the run. IWM went from 212 down to 192. That's a tiny little 10% correction, where a lot of other mega cap techs didn't correct nearly that. So it's hard to justify selling all the technology companies, and I have a portfolio of tech stocks, but, am I going to go and just put it into a portfolio of like Ford Motor Company, or, and then go into the small caps as well? I mean, what's the story that drives that higher? Maybe it's a Fed story, and maybe that can, in the second half, we actually get lower rates. Those companies all start to do better. Solar turns it around, all these things turn it around. But, until we start to see significant cuts from the Fed, this remains a technology market, and it's hard to bet against it.
Yeah, I agree. And I think it even goes beyond what you said, but I think it's an excellent point where you're just like, what's exciting about small caps anymore? And like, I actually remember debating like some SoundHound AI people. So even if you're looking at AI, right? And basically what I was saying is I was reviewing a bunch of value metrics, like, how many times revenue and like when they were expected to be profitable. And I was just like, NVIDIA is like cheaper than SoundHound by every metric. And, as we talked about, it's still growing at 236%. Why would you own SoundHound? Even though like I don't think SoundHound is a bad 5-year play. It's just like, why would you bet on that when Nvidia is growing at this torrid pace? And I think that's just a very like I think what it is it just makes it difficult to generate new ideas, I think, for good reasons. But maybe just to give people a different flavor, I think that like one of the things that I'm looking at is I think, some of these consumer cyclical growth companies, I think are like the only thing that I think if you're looking for diversification, even something like a newer one like Kava or Chipotle is something that I've had for a while, where it's just like, I think that's the only thing that can compete, because the market is becoming so much more retail driven. It's crazy. I mean, Dave and I were talking about how we had the same like graph in our investor presentations, because it's just like, it is kind of hitting you over the head, like how much growth. But it is like the other thing is, I think it was like at the end of what was it? Well, anyway, a different stat, like 75% of hedge funds are now using like, social media data to start.
Yeah.
And I
Right.
think it's just like, I think the only way you have an exciting like story these days are you an AI company that is like growing and also very profitable? Or are you like a retail brand that people know that can
Mhm.
garner that same kind of momentum?
Yeah.
And I think nothing else can cut through the noise.
Yeah. I mean, social media, like, that's the driver here now. Like, you can say, retail's coming. When we started talking market structure, Dave, 15 years ago, retail was
Yeah.
12 or 13% of the market, of
Right.
trading.
Exactly.
Now, where is that number now? And that's just the trades. You've got to consider that. Well, you're saying the institutions are now using social media, so indirectly, they're following retail traders too. You could argue.
Yeah, it's not retail is not only at a record level from a trading perspective, but the chart George is talking about, which is a monthly capital inflow
Yeah.
perspective. This is everyone was very dismissive of the stimmy checks, and this is a COVID effect, and we're not sending those $1,400 checks out anymore. And retail continues to pour money in, and it's also when we talk about it and think about it, there's this great wealth transfer that people have been talking about for a long time is happening today. And it means that investors as a whole are getting much younger. They're getting that capital
Mm-hmm.
and they're putting it, like you're talking about, George, into the companies that they love, right? And the companies they see on a regular basis or that are doing well. And it is an incredible trend that is driving markets dramatically.
Yeah, and I mean, I think the other thing about it that's very interesting when you just like look at it and you're just like, oh, like I think that makes total sense is, I talk about like back when I was on the buy side, I started, when probably like 20 years ago now, I worked on the buy side for the first time. And like at that point, it was still just like people like phoning their friends, and that's how ideas got distributed. But it was Wall Street generating the ideas
Mhm.
always. and then retail would tack on to that once they saw the movement.
Yeah.
But now, like, Wall Street is robots, right?
It
Predominantly,
is.
if we're being honest.
Yeah.
So it's like retail starts it, then the robots tack on, right? It's not really Wall Street. Like, yes, of course, like it's not like
Oh,
Wall
I
Street doesn't
totally
generate
agree with
ideas
this.
anymore,
I've
right?
long thought that like this quantification of Wall Street means that there's less diversity of thought. It reinforces historical correlations and amplifies them. And now the creativity is coming from outside.
That's
Yeah, and I absolutely think like technical traders, like it's something that I used to think was like not like whack when I like, was on Wall Street and like we would all just kind of laugh at them. But like now I actually see a lot of technical traders that do make money time and time again because of what we're talking about. There are patterns in the market. There's like, for all like I think, retail traders get upset about things sometimes and like, yeah, it's not fair. And I think I've told Dave the analogy, but what I always say to people when retail investors say that's like manipulation, where I'm like, well, I think it's not necessarily fair, but I think manipulation is kind of overused just because it's just like, okay, like if you've ever flown on a plane, do you complain about people in first class or that fly private jets? And I think that that's kind of the equivalent of what happens with trades. And there's like a lot of built-in unfairness. Trades get just transported in a different manner. And a lot of that is automation that kind of even makes it more predictable. But yeah, I think that's a big thing that the markets have always been unfair, and I don't think people promise fairness.
for sure.
And I think that we take a lot of unfairness in the rest of our lives, like in the in the airplane example. I know your audience here is probably a lot of retail, and I've spent a lot of time building resources for retail investors. So I'm someone that's definitely on the side of retail investors, but I always think you have to accept things for what they are if you're going to do things well and if you're going to achieve results. And I think that beyond the fact that we're all kind of talking about the same patterns, I actually just think there's more opportunity for retail traders than and investors than there ever been. So I hope people don't get discouraged if they're wrong a time or two and they keep educating themselves.
I mean, the
Well,
algorithm.
let's talk about the retail
Okay,
trade because we saw GameStop go nuts for a couple of days now. I mean, really, like
Yeah,
over the last, it hit a low of somewhere around $10
yeah.
about 9 days ago, trading 1583 right now, so 58% in like less than 2 weeks. Dennis, you commented to my post on Twitter saying that you thought Carvana kicked all of
It
this off,
absolutely
and now
did.
you're
Yeah.
starting to see spillover. Yeah. So what did you see?
I actually said it on the pre-market prep show that day when Carvana was gapping up $30 and GME was flat. I'm like $12. It was trading. I think it was 11. It was 11 something that day. And I remember saying, I'm like, this probably kickstarts GME because Carvana was one of the, stocks, the short squeeze stocks. We're going to take the stock. And obviously Carvana has become a different story here now, but it was one of the leaders on the short squeeze train. So it was kind of predictable that
Isn't it
GME.
one massive fraud, or is that just my read of it?
Well, but it's predictable that,
Yeah, is
they'd
anyone
come into
buying
GME. The
Carvana
algos.
covers?
To George's point, though, the algos, it starts with, one thing, maybe it starts with retail, even in social media. But once the algos get a hold of something, like, and even looking back to what GME did, from the $20, the $10 to, to 300 and whatever, it went $350. I can't remember now. And obviously that was pre-split. It's when you look at your chart, you don't
Yeah,
see those
basically,
levels.
yeah,
I mean, that started with retail, but that
right.
completely turned into algorithmic trading that drove that. That wasn't, grandma, with her 200 shares buying it up at $350. That was 90% out. Like you remember watching it those days. It was all algorithms. It was all
It
algorithms.
was it was nuts.
Momentum
Although there
ignition,
was
whatever you want to
also
call it. But it went
right,
crazy.
it was momentum ignition, but it was a gamma squeeze as well,
All of
right?
it combined,
Yeah.
perfect storm.
Yeah.
And retail benefited tremendously. Anybody who sold obviously benefited tremendously from that. But I mean, that's where we're at. Is like these stories start, in social media, or something sexy. Oh, that's a good trading idea, and then it just kind of goes from there. It's why something like Carvana, naturally gets everybody thinking about GME again. And then you just get a kickstart with a few retail traders coming in more and more. And then the algos grab it and boom, you have a 30% pop in GME in a day. And everybody's like, what the hell happened? It happened with it happened because of Carvana. That's why it happened. Now, does it continue? Do we go on this major run? Probably not, because it's difficult for these stocks to continue because there's just so many bag holders in them now. But, they do have these little, pockets of, where you can trade these things from, from a short squeeze perspective or just from a day trading perspective. But there's definitely some, movement here where, some of these stocks, they just get left for dead. But, something like GME, it's still even impressive, just to finish off the tangent, that GME is still where it is today. I mean, if you do on the post split, this all started with Roaring Kitty, and the stock was basically a buck. It's still $15. It's still up significantly from where it was.
It's
A
up a
company
ton,
that's
yeah.
burned a lot of cash. It
And
held up.
it has turned around, right? I mean, if you look at it,
Yeah.
they were like losing $300 million one year. They're profitable now. I mean, it's a good
Retail
story.
turned that story around, though. Without
Yeah,
retail,
saves the company, turned it
retail
around.
saved that company,
Yeah.
which is unbelievable. You would never have
And there
saw this
are some interesting structural things besides, shorting and derivatives. But even when you look at some of the structural issues, like, the time frame out of large flourishes of activity, and third, I think like the T+35 date was where it kicked off. I mean, I don't know if all of these structural issues are also playing into it, right?
Yeah, I mean, I think the very interesting thing about what we saw there, and something that I heard, and I don't want to be that specific on a broadcast, is that there were some big institutions that were
Yeah.
buying up a lot of shares, loaning them out, and then calling those to really accelerate both short squeezes.
Wow.
Yeah, like I
Interesting.
know one institution on GameStop that I'm told made like $1 billion on just the loans, like the loan payments. Um, so
Wow.
I think anytime,
And the
and this is the other thing.
utilization has been pegged, right? The if you look at the short interest metrics and the stock loan market on GameStop, it has been pegged at 100% or not at the high 90% utilization for a while now.
Yeah, I mean, but I think the key thing there, and like why I always say it's just like, look, if you make money on these and you're very good at these meme stock momentum trades, like all the power to you.
Mm-hmm.
But like a lot of people, especially now, are not making money on them. And I just think like even sharing facts like that is like super important, because it's just like I think at the end of the day, the problem is retail doesn't have control of these trades, especially like when institutions start to get in, controlling things by buying up shares, loaning them out. A lot of the times just like controlling when they get like released in the wild to be short again. And, when a lot of these institutions are like loading up on put options, just getting ready to make a bunch of money on it. Like, I think that's a dichotomy. And like, I would love to see more, retail investors banding together on stocks like Nvidia and sharing a thesis on that,
Yeah.
instead of like these where they do have control. Like, when I think that's the dichotomy now, where we're talking about the opportunity of retail leading these charges based on value, where they have total control in the end of the day, because there's floors on these. It's not like a GameStop or an AMC when they shoot up and then the institutions are going to basically decide when there's, value again, because there's no real way to determine like what a fair value of a stock is when a huge part of that value is social sentiment, where there is some value to, but it's a very hard value to assess and agree on. That's the thing that I like, that I would love to see. A lot more people kind of sharing theses on these high growth tech names, instead of these ones where like I feel like on the high growth tech names we're talking about like more control for retail. And then I feel like on the meme stocks, that's kind of just like throwing away that control and handing it back to institutions.
Well, let me tell you, I think a great place to have a conversation and information sharing like that is on Urban Finance's new verified shareholder communities. I encourage everyone to check it out. We launched publicly last week,
Nice.
May 1st. We're very excited about that. We've seen a ton of activity on the site. And if you connect your brokerage account, you get put into verified shareholder communities where you can have conversations and exchange information with other actual people, not bots,
Yeah,
who own shares in those companies.
very nice.
So
Which is
thanks,
great.
guys.
I'm a big supporter of that.
Thanks, George. Thanks, Dennis. Definitely appreciate you guys joining. This was a great conversation. I hope everyone learned something, and I hope it gives you some ideas about how to trade this market and invest for the long term, and capitalize on some of these trends. There's a lot of bullishness on this episode, probably because
Bearish
Eric is
next
off.
episode.
Yeah, he's
We
off
just bought the
yodeling in the
top.
fjords. Yeah. When we do the next episode and Eric is back, we will have him yodel for everyone.
Oh, excellent.
That I promise you, or at least we'll push him to do it.
You caught me at a very bullish time. I can be the gloomy one at times.
You've been swinging back and forth. I've been reading. Yeah,
I swing back and forth
been
too.
rough.
Short-term trader, I go back and forth too. I was probably bearish at the bottom and bullish at the top. That's usually what happens. But then I swing around and go the other way. So
yeah, that's right. Yeah. All right. Thanks, guys. And thanks, everyone, for listening. And hit that subscribe button. Leave us a comment. Leave us a like. Let us know, what you want us to cover next time. And we'll be sure to answer any questions and try to take all of your feedback in. We appreciate every bit of it. We appreciate all of you. And we'll catch you next time on Let's Talk Markets.